Good morning, everybody. Thank you for joining us for another edition of our weekly real estate backstory. We do this every Monday morning in our hopes to try and kind of bring you up to speed about what's going on, the comings and goings of the real estate market, kind of pull back the soft underbelly and show you what's really going on. So my name is Alan Richardson. I'm the managing broker here at Maximum One Realty and Realtor Partners.
My name is Richardson, the compliance broker for Maximum One Realty and Realtor Partners.
And we have a lot of really interesting information to share with you, kind of like we do every week. I kind of wanted to start off and let's share our screen.
Well, before we start, just really quick, anytime you guys have any question or particular concerns, please email us at broker@maximumepartners.com. And we'll be more than happy to make that first of our slide every week.
Sure. Sounds like good. All right. Kind of wanted to kind of jump in there and show you guys what's going on in the national markets and things like that. So overall, here in the South, we make up about 44% of all home sales in the United States. And
that's huge.
That's a really good thing for us. And when you think about, we don't have almost half the population, but almost half the home sales happening here in the South. And we are a migration hotspot, which has its good and its bad side of things for sure. But the other side of that I want to kind of highlight here is that of those, of that 44%, we're seeing that another almost 43% is in that $250,000 to $500,000 price range. And honestly, more would be in that $100,000 to $250,000 price range if we had the inventory. We don't. And so we're seeing a lot of pressure there, but that's kind of our big hot spot. So, just knowing that if you were going to focus your business, of course, you'd want to focus it in the South. That's where almost half the home sales. And then in that 250 to 500,000 price point, that's where the largest number of sales. And so if you're trying to go where the market is the best, it's going to be here in the South and in that $250,000 to $500,000 price point range. Our mortgage rates this week came in at 5.54, which is basically pretty flat from where it was last week. However, tomorrow the Fed is going to be doing their monthly meeting, and we're kind of expecting either 75 basis points or a full point increase by the Fed. Now, the Fed or mortgage companies have already kind of been hedging that bet a little bit. Our mortgage rates are already kind of impacted because the federal funds rate doesn't affect it directly, but it does indirectly. I know it doesn't make a lot of sense. The more volatility there is in the markets, the more people move into 10-year treasuries, the more people move into 10-year treasuries, the higher that rate goes.
Correct.
And our mortgages are highly tied to the 10-year treasury rate. So we are expecting to see, another jump in price in interest rates for the federal funds rate, but we aren't expecting to see a huge impact because a lot of the mortgage companies have already taken that hit. We're already elevated from where we are. Now, we know that inflation is a big deal, and this is, we don't really get into politics. However, we do like to highlight the things that we see kind of going on. And right now, migration hotspots have the highest inflation rates in the United States. And if you can kind of see on our screen here, you can see it up there: Phoenix, Arizona, Tampa, Atlanta, Miami. We are one of the top migration hotspots in the U.S. We reside pretty squarely inside the Sun Belt, kind of across the whole southern U.S. And so, that is not necessarily a good thing for us, but we do kind of have to understand what's really going on. Even with the market shifting and that kind of stuff, we are still a very desirable place where people want to come and live because we're good people.
Well, there's a lot of diversity here in Atlanta, and also we have the major hub of transportation.
Yeah.
So
our housing affordability index is continuing to drop. This is what percentage of people can afford the median priced home. And right now, it was almost at 150 basis points. Now it's right at 100.2, and so it's at the lowest it's been in a very, very long time. Now, all that being said, this is the median qualifying income that you need to be able to afford a median price home in these different regions of the U.S. And so here in the South, it's right at about $82,000 is somewhere where that number is for either your median family income or your qualifying income. And so we provide that just as another basis point, an item that, like if you're not making about $82,000, you're probably not going to be able to afford the
And that's
median
per
priced home.
household.
And that's about $400,000 in the Georgia, Atlanta area is a kind of our median price point. So doesn't mean you couldn't afford something in the 250 range. That's just kind of that median price point. That's the amount of qualifying income you'd need to cover that. And we just like to give you that number. Now, what does that mean when it comes to, oops, I just totally missed a slide.
Mortgage payment as percent of income.
Yeah.
So right now we're running about 22.8. This year versus last year was 16.3. So you see the difference, even though your purchase price may be the same, but your monthly payment is different.
And so we're seeing where affordability is going to be the big driving factor for real estate throughout the rest of this year and probably in the next year. It's going to be about affordability, and that's where we're going to see some pressures going on. We kind of wanted to go through and kind of show you some of the numbers that we're seeing, and so you can see that even though we are in a shifting market, please don't bury your head in the sand and act like there's not a shift in our market going on.
It is shifting.
There's absolutely a shift in our market going on. That doesn't mean that we should be running around acting like our tails are on fire either. Markets shift kind of like a herd of turtles. It just doesn't happen overnight. And so we are in the middle of a shift. And so we want to kind of show you what that really is looking like. And so first thing is even though we're seeing some shift, look at what's happening with our median list price. Our median list price is still about 17% up over last year. So, we're still seeing a lot of demand for properties, and we don't have nearly enough supply still. We are starting to see more inventory, but it's not there yet. This is our active listing count. You can kind of see that the number of active listings has been increasing. It's just nowhere near where it was in 2017, 2018, 2000. We're around a third to a half of the total inventory that we had, in those years. So is inventory increasing? Yeah, sure is. Does it make for a great soundbite of inventories double where it was this time last year? Yes, but when you look at it in reality, okay, it is improving, and we need it to improve because we need more inventory. But this is not 2008.
No.
So how about newly listed homes? Oh, look, we're running seasonal averages on the number of homes that are coming new into the market.
It's more than last year, that's for sure.
It is,
but at the same time, it's not more than 2019.
And
so
yeah, it's not this big crash kind of thing going on. How about days on market? Well, if the market's shifting, days on market should really be shooting through the roof. Nope. 4 days faster. And so what we're seeing is properly priced homes, well maintained in good areas, are still going really, really fast.
Absolutely.
And so, we're also starting to see a lot of differences in the different price points of homes as the amount of activity going on them. Now, here's one where we're having a lot of sellers getting, the market's kind of taking them and going, right, give them a little bit of shake here kind of thing. And so we're seeing where more properties have had a price reduction than in a long time kind of thing. We're still not at the number of price reductions than when we were in 2018, 2017, 2019, but we are moving that direction. So really what that means is we're moving into a more balanced market. And that's the thing is that, for so many folks who, especially if you just came into real estate in the last couple of years, you think that's normal. No, it's not. And so we're moving into a more balanced market. So our home buyer competition has dipped to its lowest level since 2020 when the pandemic hit. Okay, so again, we're moving more into a more balanced market. And so you can see that, yes, when this says home buyer competition dips to its lowest level, okay, 49.9, 50% of homes still have multiple offers on them. Okay, they still have bidding wars going on. So is the bidding wars as intense? No, it's not. And honestly, we're thankful for that. But
Absolutely.
the days of I got 37 offers on my property, those are not here anymore, unless it's just ridiculously
Well,
priced at
not
this
unless
point.
you price it with intention of multiple offers, which I do see that once in a while.
So if you look at this, when you look at this graph, you think, oh, it looks pretty rough. But you can see that in 2021, 59.3% of all offers face competition, and now it's 51.8. Okay,
Mhm.
so yes, it's 8% less, but it's nowhere near, it's not this big bombshell dropping in there kind
Correct.
of thing. Existing home sales slid 5.4% in June. We've been talking about that, and we've been seeing those numbers already. We've been seeing, I mean, we've been down for like the last 4 or 5 months on the total volume, number of sales. However, dollar volume has been up. You can see what total existing sales actually looks like, and you can see that. Are we trending down? We absolutely have been ever since the interest rates started rising up.
Absolutely.
But are we, in the dumps?
No.
Nope. Because if you look at what this is the median list price at the same time, and you can see that that continues to move up. Now, one thing that we are seeing is we are seeing a lot more pressure on the lower tiers. So, this is the percentage in sales from a year ago price range. More, with the interest rates rising, people are having to reevaluate how much home they can afford. And there's been a bit of a knee-jerk reaction for several months where they're kind of lamenting. A lot of our buyers were lamenting, like, why didn't I buy then? Why didn't I listen to you guys when you told me it was the right time
And
to
you
buy?
still have buyers that still sit on the fence post and wanting to know, oh, it's got to come down. It's got to come down. We're in a bubble, and that's and that's
We
the
just
reason
don't see that
why.
happening.
Yeah.
Yeah. So at the same time, we are seeing mortgage applications down about 6%, 7%. Refis are down. We keep
Well,
hearing
and that's
that.
because nobody's refi at a higher interest rate than what it was back in 2020 and early 2021.
Yeah. Well, and so I want to show you this really quickly, and I don't want to get super techie geeky, on the numbers here, but this is the 10-year Treasury yield minus the 2-year Treasury constant maturity, which sounds like a big mouthful, but really what happens is this is what's called a yield curve inversion, and that's when the 10-year Treasury is
Goes up and down.
these two data points crossed. And in the past, when these two data points have crossed, we've moved over into a recession. And so we know that there's a shifting market. And are we in a recession right now? Are we not? Wall Street says a recession is coming. We have a lot of our consumers, a lot of our buyers,
It's already
they say
here.
it's here, right? And this may sound what's the right word? Uncaring, but I don't care. And I know that sounds absolutely like I can't say I don't care. Okay. And I don't mean it that way, but too often we spend so much time, so much energy worrying about, are we in a recession? Are we not in a recession? Have you made your phone calls? Have you called out into your database? Are you active in your KV core? Are you reaching out on social media? Are you engaging with your clients?
Are you prospecting at the end of the day?
I mean,
Even though we have a shifting market, the problem is that if you're not continuing prospecting, you will not get the volume.
We were in business in 2007,
Mhm.
and even the recession before that. And so what we see is that every time that there's a recession, there's a downturn in the market, there are so many agents that absolutely talk themselves right out of the business. You know what? Things are bad. Our son, he wakes up in the morning. Sometimes he's a grumpy little SOB. And when he wakes up and he says, this can be a bad day, I can promise you it's always going to be a bad day. Right. It is. And so, if you've got it in your mind that that there's a recession coming and that is going to destroy your business,
you're not going to make any money.
I promise it will destroy your business. But if you are under the mindset of, what, the only constant we have in real estate is change, then you're gonna weather the storm. You're gonna come out
with a change.
So that's the thing, is that we can't get wrapped up into, is the market shifting? Are things moving? Yeah, but honestly, it's moving really, really.
Well, the thing is that, move with it. Don't sit there, be a victim, be proactive, be reactive. Don't contribute to what we already know. Do know your market and learn how to move forward with it.
Yeah. Well, one other thing I want you to kind of look at is like the world's most successful real estate investor, Blackstone. We're not huge fans of Blackstone, but you can't really be like, oh, well, they're not successful. They're the most
They're
successful real estate investor in the world. And guess what they're doing right now? They're buying.
$24 billion.
They just raised another $24 billion to put into the residential real estate market. And so if things were going so bad, why would I mean, it's not just them. We have investor activity that is really, really ramping up. And I'll show you investor activity here in a minute, but just understand that this is one of those things where, when a lot of folks are operating from a position of fear and not really thinking through things, they've kind of looked at the numbers and they said, you know what, we have a deficit of 6 million households in the United States. We have the largest millennial generation moving in. Just supply versus demand is here right now. Things are going to be shifting, but they're always going to be shifting. And no matter what, people need a place to live. Yep. And we don't have enough places right now. So, Georgia, it was ranked as the 10th best. Thank you. Need help there. 10th best state to do business in. Just a little data point to kind of share with you. By the way, rents keep on rising, in case you didn't know. So we are going to start seeing prices leveling off. We aren't going to see rents stop to rise. Even if you read the latest news report from the folks at, say, Blackstone, who's one of the largest renting investor landlords, thank you, in the U.S., they're looking at rental rates continuing to increase. And see, that's very, very normal. As even though property values may start to level off, you're going to see rental rates continue to go up because all those folks who as their leases get renewed, that kind of stuff, they're going to keep going up.
Normally on those commercial, what I call industrial leases, there's always a automatic extension, and without automatic extension, there's also an increase of that rent.
Now, our builders are kind of worried right now. Our builder confidence has really dropped, and it really. I'm not. We're going to try this again. Builder confidence has really dropped, and I understand why. Like they're having a lot of supply issues. They're having a very difficult time being able to build and make money at the price point that needs to happen at right now.
Correct.
And so that is one of the biggest challenges right now for new construction. And so in turn, what we're seeing is new construction is going soft. Okay, the number of new construction starts, the number of homes that are being built right now is dropping, and that's really bad news for us. We don't have enough homes already, and we definitely don't have enough entry-level homes, which is why we are seeing some builders who are moving more into townhomes and condos and things like that.
And we've seen a shift in builder design as well. They're basically doing townhomes where they can afford first-time home buyer versus the initial starting point of 400,000 plus.
But I want to show you one of the negatives here that I see going on in the market. And so this is our national investor market share. So this is the market share. And by the way, Atlanta and Georgia looks exactly the same. We're seeing where investor market share is shooting, continuing to move up. And so again, if the market, like we just see so many folks who've never owned a house telling me that buying a home is a really bad investment. Meanwhile, all these investors are jumping into the residential real estate market. But here is my concern, is that where they're moving their money into is not yet. Single family residential is up.
But they're moving to multifamily. And the reason being is that it's more cost effective to build a multifamily and have less resource in managing because it's all one spot.
Well, but the other challenge here is that wealth in the United States is tied up in home ownership. And so that same wealth is tied up for investors or for single family occupants as well. So, if you own a home, you're going to start building wealth. That's why redlining was such a terrible thing for the African-American community in the past, right? And so we know that property ownership is a big deal. Well, what we're seeing the investors move over into is because so many folks are kind of going into it being like, well, I'll just rent. Well, and then you're always just going to rent. And so the investors are moving into the position of, fine, we'll own the property, let you pay our mortgages and let us make money on that. And so you can see that multifamily is shooting up and continuing to shoot up. And so that's one of our concerns, is that our builders aren't building single family homes.
Correct.
But we're building a lot more multifamily. And so for, that hope of the American dream, that entry level product, those kind of things, that is a big deal. Like communities thrive based on home ownership. Communities don't thrive based on multifamily.
No.
I'm not knocking, I'm not saying anything bad about people who live in apartments or multifamily. That's not what the deal.
All we're saying is
the bottom
that
line
we're
is
not
that,
building wealth for our community.
Right. And that's a really important thing. So we're going to keep, doing our best to advocate for it. We hope you are too. But that's a big deal to us. Now, this week, when it comes to training, so tomorrow we're going to have Introduction to Transaction Desk by Georgia Molest. That's going to be in our Fayetteville office. Please, 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 if you are not great at transaction desk, this is this is one of those you really absolutely need.
Well, it will shorten your time spent on transaction and be a lot more efficient than, a lot of people resist to change, but a lot of times those changes are made to improve the quality of your life. So please take a moment and go to our class and sign up.
Yeah. At the same time, we have licensed law for agents and brokers. That's going to be virtual. Dana is teaching that, but that's, you have to have that 3 hours out of every 36. You've got to have licensed law. And
every
then
4 years.
Yep. Oh, sorry.
It's okay.
And then on Wednesday, I'm teaching effective negotiating over in our Noonan office. And on Thursday, I'll be in West Georgia teaching making money with real estate investing, something near and dear to my heart. So
and let me tell you, it's a good class. So if for those of you that are just contemplating about investing in real estate, do attend. Usually that's a pretty full pack.
Yeah, I teach it all over though, so you don't always have to go to West Georgia. No. Anyway, we hope you guys have a great week. If we can be any kind of service, please call, text, smoke signals. We answer it all.
Thank you, and have a great Monday.
Bye-bye.
Take care.